We're in Turkey. I mean, a lot of people say Turkey. Wow, the Turkish lira is bombed out, but yet we're in companies that take advantage of the weak lira, Turkish lira.
So that is a consistent theme with you. You are not just looking strong dollar, negative for emerging markets. You are flipping it and saying strong dollar, weak local currency. Who benefits from the weak local currency?
Exactly, exactly. So it's very much a bottom-up approach in that sense.
So, Mark, it's great to see you. We seem to be operating against a backdrop where people think either emerging markets are to be avoided because there's a financial crisis or some kind of black swan event brewing, or that investors should increase their exposure because there's value and opportunity that's underappreciated right now. So I'm hoping that we can lean on your many years of experience and expertise in this space to better understand what's happening.
Well, you must remember that we're now really in a bear market. The market, as you know, hit 30% down, depending on what index you're looking at. So usually in such cases, there are opportunities. There's no question. It's a good opportunity to be looking at stocks that may be selling at very low prices. So yeah, I would say it would be a good idea to start nibbling. Let's put it that way. But I also feel that there's a chance for the other shoe to drop, so to speak, because the Fed will definitely have to raise rates more and more. You know, the playbook is that the interest rates have to go higher than inflation. So with inflation now at about 9%, that's where interest rates have to go. So in that case, a lot of companies will be hurting. The housing market will be hit. So all of these factors are still in play, but the market has, in some ways has anticipated that kind of movement. So I would say it's a good idea to be nibbling, but not put everything in.
Yeah. And this is what's so tricky, I think, because we do seem to be at this transition period. And you've got on layered on top of that geopolitical concerns and, as you point out, inflation, energy, all of this sort of happening. It's a kind of a cauldron that's making it very difficult for investors. If we start sort of on the very macro with currency risk, I think a lot of the concerns around emerging market really center around the strength of the US dollar. Is the rising US dollar threatening to spark another Asian financial crisis similar to what we saw in 1997? Do you see that as a risk?
There is a risk in some countries, not necessarily in Asia, because the Asian countries generally learned their lesson during the Asian crisis. But other countries around the world have built up too much in foreign exchange debt, US dollar debt. And by the way, renminbi debt. Don't forget, the Chinese have been lending around the world in emerging markets like crazy. And these countries now owe China quite a lot of money. So you know what's happened in Sri Lanka. Uh, Bangladesh could be on the border, but they seem to be handling it so far okay. But generally speaking, this strength of the US dollar is hurting a lot of countries that are in debt. Now, on the other side, it presents an opportunity because we can then find companies in these countries that are exporting their products or services, but their costs are in local currency. So their profit margin increases as a result of the devaluation of their local currency.
And so this is where it's interesting to have the bottoms up approach in a place like emerging markets, because we do tend to paint it with a very broad brush. But in the past,
Exactly.
yeah, but in the past, we've seen that at some point when you get these macro geopolitical pressures, they do tend to swamp everything else. Are companies, especially the ones you look at, are countries better situated this time so that you can use that bottoms up approach?
Yes, I think we're in good shape to use the bottoms up approach, not the macro approach. In other words, as you pointed out, you know, the trend in the past during the Asian crisis is to paint a broad brush, say, okay, forget about Asia, they're all in trouble. Now that's not the case. You've got very, very big differentiation between these various countries. For example, India is in much better shape than China at this stage of the game. And of course, the Indian market has done a lot better than the Chinese market. So these are two huge countries, over 1 billion population each, and they're both behaving very, very differently.
It's so interesting that you say that. Why is India? What's the difference? Why is India in better shape?
First of all, they're growing at a faster pace. You must remember the population in India is much younger. Average age is about 27, whereas in China it's about 37. So India is where China was, let's say, 10 years ago in terms of growth. So we're going to be seeing very, very rapid growth in India, number one. Number two, the technological revolution, particularly with things like cell phones, robotics, etc., is now hitting India in a big way. And that's producing incredible increases in productivity. So India has really embraced the digital revolution. The government is moving in many, many different directions to imbue the economy with digital kinds of operations. And that's having a big, big impact, very favorable impact.
I just had a very interesting conversation with a sort of veteran investor, fund manager, very very instrumental in the formation of the capital markets there, Vallabh Bhanshali from NM, and he was talking about that very thing, that sort of trend, the digitization, the formalization of the economy, and also their embrace of digital currencies, which was very interesting to me. Is that something that you're watching? What is your thinking around cryptocurrencies right now, and especially in relation to India?
When anybody asks me about cryptocurrencies, I say I don't like to talk about religion in public. But the reality is, he's absolutely right. And in fact, I like to look at the Bitcoin price as a leading indicator for what the stock markets are going to do, because I don't think we have realized the extent to which digital currencies have hit the common man on the street. If you talk to any number of people who normally would not be in the financial world, would not even have a bank account, but they're into digital currencies. And many of them made money doing that. So they feel rich. So that's when I say I think another shoe needs to drop. In other words, the day that people lose faith in digital currencies, or cryptocurrencies, I should say, we really have to differentiate, by the way, between digital currencies and cryptocurrencies. I go around everywhere in the world. I've been to 4 countries in the last 2 weeks, and I use my cell phone to pay. This is reality. That's digital currency. Cryptocurrency is something different. And when I talk about cryptocurrency, I believe that many people are using cryptocurrency to a much wider extent than anyone realizes. And that's something we have to look at very carefully.
So it's so interesting. And you're right. They are different. And it was very different when we were talking about that in India, too, because we're talking about something the government's looking at it. It'll be maybe a central bank digital currency or a national digital currency. And it's, certainly Bhanshali wasn't talking specifically about a coin that's out there today. But I'm interested in what you're saying. So are you bullish digital payment? Can we use that and not cryptocurrencies? You don't see those worlds together or melding or morphing, or one of the coins that's available today being the standard bearer for that digital world? You see them as completely separate?
Completely separate. Digitalization of currency, of national currencies, will take place. Is taking place, as I just mentioned. But when it gets to crypto, the problem you face is when something goes wrong. there's no central authority to iron it out. That's the problem. They talk about blockchain, and okay, everybody on the block and the chain, every block should know what others are doing. But the reality is that it's extremely difficult to find out what they're all doing. And that's where the fault in the whole system is. So there can be a real problem when, well, you've already seen a lot of people losing their cryptocurrencies for one reason or another. Something happened to the block. And if people tell me, oh, blockchain can never be hacked, I don't believe it. It can be hacked.
How do you thread that? Because I know that you're interested in technology and you're interested in the digitization of emerging markets. How do you thread not being involved in cryptocurrencies? So you don't have any exposure to any kind of cryptocurrencies?
That's right. No, we don't have any exposure to cryptocurrencies, but we're definitely in the digitalization of currencies. For example, we have an investment in Kenya, and we have an investment in a telephone company actually there, Safaricom it's called, and they have a system of payments throughout the country using cell phones, so that someone can go to a small shop. They may not even have a bank account. Most people don't have bank accounts. They can go to the shop, give the shopkeeper money. That shopper will give them a code. They will then send that code by cell phone to whoever they want to transfer the money in other parts of the country, and that person can go with the code and get money. So there's an example where it's digitalization of currency, really.
Yeah, so it will be the digitization of basically fiat currencies, of national currencies.
Exactly. Yeah. Now, the day when a cryptocurrency is hooked to gold or some form of value like that, then you might see an international movement towards a single worldwide currency. But the governments don't like that. Governments don't want people to have their own currency.
Yeah, we've got a little peek at that, haven't we?
I'm surprised that governments have tolerated crypto to this degree. Of course, China has banned crypto. A number of countries have banned it, but the U.S. still is allowing it. So it's going to be interesting how this moves forward.
And a lot of people think the longer that goes on, the harder it is to dismantle it or to imagine a world without it, the more ordinary folks who are interacting with it.
Exactly, because a lot of people have a wallet full of some form of cryptocurrency, and they feel they own that, and they don't want it to be taken away. Of course, governments are going to start to think, well, maybe we should be taxing the transactions, or maybe we should do something to regulate. As you know, the SEC is talking about regulating of cryptocurrencies in some form or another. But there'll be a lot of resistance.
Just so I completely understand your view, you actually think Bitcoin and ETH and those coins just won't exist at some point, that their value will be zero?
Yeah, I think so. I think at one point that will happen because it's based on faith, really, the degree to which people think that it has value. That's the way it will work. Now, it's being used for transactions, to transfer money, to transfer value. And that's quite a good purpose in some ways for people who want to escape surveillance of what they're doing for good or bad reason, whatever reason. That is a function that you see, these cryptocurrencies playing. But the variability of price, the incredible variability of price is something that scares a lot of people. If they do a transaction, they've got to make sure they immediately transfer into one of the fiat currencies.
If we kind of continue on the currency theme, I'd like to pivot it to China. because you mentioned in the emerging markets, a lot of debt, both in US dollars and to the Chinese. What do you see happening currency wise with China right now?
Well, as you know, China wants to make the renminbi a reserve currency. They want to replace the US dollar as a reserve currency. Now, of course, it sounds crazy now, but hey, the US dollar is not omnipotent. It could decline and become less of a reserve currency. But right now, the US dollar is dominant. But the Chinese are challenging that. And one way they're doing that is saying, look, trading partner, you have to settle trade in renminbi instead of dollars. Another thing they're doing is when they give aid or they make a loan to a country, they say, look, you got to keep some renminbi in your central bank as a reserve. So gradually they want to make this transformation, but it will take a long time, I believe. It'll be very difficult because at the end of the day, the Chinese want to control the exchange rate of the renminbi. And that is a big barrier. The beauty of the US dollar, the reason why the US dollar is so popular is that it's freely traded. People can exchange it at whatever rate they want and without having the Fed trying to come in and control it. So that's a big, big advantage.
Do you see the dollar strengthening from here further?
Probably not. It'll strengthen a little bit more, but it's already strengthened a lot. You've seen many of the currencies around the world devalued substantially against the US dollar. So I think we're probably at a point, even look at the euro. Whoever thought that you'd have a parity with the euro? And that's gone to that point. What will happen, of course, is as the US dollar interest rate goes up with the Fed raising rates, all the other countries must follow. Otherwise, their currency will get weaker. So that's another impact that you have with the US dollar.
Yeah, and I think it's that rising the dollar, even if it doesn't continue to strengthen, but staying robust, central banks around the world raising interest rates at a time when potentially global growth is slowing. I think it's that mix that has people so worried about what's going to happen in emerging markets.
Well, that's right. I mean, it's already happened. If you look at emerging market stocks, stocks even in Europe, around the world, they've all declined because of the fear of this impending high interest rate environment. And by the way, this is related to great degree to cryptocurrencies, because, as you know, in Europe, for example, they were dealing with negative interest rates. In the US, of course, interest rates were like less than 1%. If you went to the bank, you couldn't get anything. So that drove a lot of people to go into crypto, because some of the crypto exchanges have been offering very high interest rates for deposits of dollars. Now, as the Fed raises rates, this will become less and less possible or attractive. And people will, I believe, will begin to retreat out of the crypto. So this is another danger we have to look at when we consider crypto, because the attraction that came about as a result of these crazy low or negative interest rates will no longer be there.
And we certainly have seen strains from that sort of combination of dollar strength. And, many people who come on our air talk about it as the dollar wrecking ball. The dollar strength, central banks being aggressive and hiking and tightening, or at least saying they will be, and the prospect of slower growth. We already see the strains in Sri Lanka that's making headlines. So, some of that is priced in from what I hear you saying. Some of the decline in global equity markets is pricing in that risk or the trouble. But do you think something actually breaks? That is really the concern, that even though we've seen big declines in equity markets, big declines in emerging market equities, that there still is a risk that we see more severe fallout.
Yeah, I do. The reason why I think we will see another leg down is because A real bear market is when people have lost all hope. They've thrown in the towel. They say, look, I'm fed up. I'm not going to invest any more in stocks. I've had it, et cetera, et cetera. We are not at that point yet. And I think one of the reasons why is because people still feel rich. They have money in the bank and they have crypto, which is worth a heck of a lot more than what they bought it at usually. You must remember, even with the big decline in crypto, it's still way up from where it was. And a lot of people are holding these crypto coins in the expectation that there will be a recovery. So we have this strange situation. In the past, we could just look at money supply in America, and that would be a best indicator. Now, it's only one indicator. Nobody knows how much crypto is out there. Apparently, there are thousands of coins, right? Who knows what has been produced, So I think that's the day that people lose faith in crypto. That's when the next leg will come down.
For global equity markets across the board, or emerging markets more severely?
Across the board, because the U.S. will, of course, be the leader.
This is why you said I tell people I don't like talking about religion, right? Because for you, it's all based on faith.
Exactly. The price of a crypto is based on faith. It's what people think it is, and once people think it is not, then it becomes worthless.
I want to ask you about China, because we, of course, have in the headlines right now, in the wake of House Speaker Pelosi's visit, we have China with doing military drills and exercises and, people concerned about the potential of an economic blockade. What is your view on the situation in Taiwan?
Well, first of all, you must remember, if you look at the history of Taiwan, it's been in Chinese hands for some time of its history. It was a Japanese colony for quite a long time at one point. And it was under Portuguese rule at one point in history. So it hasn't been exclusively Chinese for a big part of its history. And of course, we're at a stage now where you have a real democracy. In fact, Taiwan has been named as one of the best democracies in the world. That's very different from what you have in China. So you have a situation of a clash of really two different systems, number one. But then you have the interests of other countries in the region. Japan has a great interest in Taiwan. There's a lot of trade with Taiwan, and of course the technology exchange with Taiwan, etc. And the countries in Southeast Asia are also interested because if China gets control of Taiwan, then the Taiwan Strait, where all the shipping goes, particularly to Japan and South Korea, becomes Chinese. So a lot of different interests in Asia about this whole situation. And the conflicts in the South China Sea. If you draw a map of South China Sea and look at what China has claimed and what other countries have claimed, they're all overlapping. There's complete conflict. So I think it's a very dangerous situation because Xi Jinping has clearly stated that he wants to take over Taiwan, even if it means by military force. And of course, the visit by Pelosi gave a good hint of what the U.S. stand is going to be. So this is going to be very, very interesting going forward.
Given all of those interests and the importance to global trade, does that, in your mind, make an economic blockade less likely or more risky for China? Because you're not just talking about a U.S. China problem. It's all of the other countries you just mentioned whose economic interest and well-being greatly depend on that. Do you think that reduces the possibility that China would make a move like that?
I think the Chinese, of course, have to consider that because if you look at Chinese exports, you'll see exports to the U.S. are very important to China. And if the U.S. puts an embargo on all Chinese imports, that will hurt China economically. It'll be a big problem. More importantly, you must remember, in order to run the military in China, they need oil. And of course, China produces its own oil, but it's way beyond the point where they can depend on their own production. They have to import from the Middle East. That means that anybody who controls the Straits of Malacca, the ships go from the Middle East through between the Straits of Malacca, between Malaysia and Indonesia, and then around Singapore to China. As you know, the U.S. has aircraft carriers that stop in Singapore. So the U.S. could block that oil shipments to China. That would create a real crisis for China as well. So there are many aspects to this that make it very, very complicated. But the fact that China is acting so belligerently may be because of what's happening in Ukraine. In other words, the fact that Russia has been able to make this attack and not suffer a war, an all-out war with the European Union, may hearten China into thinking, well, maybe they can do the same thing for Taiwan. So it's very, very dangerous, I would say.
It sounds like you think this is. We were talking about the strength of the dollar, but it sounds like you think this is maybe the most worrying thing on the macro landscape right now.
I would say it is, yeah, it is, because it would impact so many countries. And the Asia, let's face it, Asia is the driving force for the global economy. And you're talking about Japan, you're talking about South Korea. Of course, Taiwan is a major producer of semiconductors.
Right.
Then you've got Philippines. Vietnam has become a big powerhouse. Thailand, Indonesia, a big source of raw materials. Malaysia, palm oil, most of the palm oil in the world comes from Malaysia and Indonesia. So all of these factors play a big, big role into considering what's happening. And of course, don't forget India, because India would be dragged into this as well, because India has a border conflict with China in the north, which is going.
And we've seen what happened with Ukraine and the disruption to global supply chain and the cost of energy. It's almost hard to fathom what would happen to the blow to the global economy should the situation with Taiwan intensify and result in some sort of military action or blockade.
Exactly. Yeah. Right. Be very serious. So that's why I think Pelosi's visit is probably been a good thing in a sense that it's a clearly stated U.S. position, which was not clear before that. The current administration in Washington has been somewhat laid back, let's put it that way, regarding these issues.
That's interesting. So, there, of course, in the world of politics, plenty of people Monday morning quarterbacking, or for our global audience, second guessing the decision around that and getting a lot of criticism for increasing tensions. But you see it as perhaps giving pause to the Chinese and clarifying a position that there are, there will be repercussions should they make a move on Taiwan.
Exactly. I think the U.S. position is very clear. They see Taiwan as an ally. They have very good trade relations with Taiwan. Taiwan is a beacon of democracy. But before Pelosi's visit, let's say the stance or the public stance was not very clear. And I think it's very important for the U.S. to make their position very, very clear.
I know recently Taiwan was one of your biggest holdings, or you is a place where you were extremely active and felt very bullish about, in addition to India. Is that still the case, or have you been reducing your exposure because of the situation?
No, it's still the case. We still have a big portion of our portfolio in Taiwan, and we're happy with it. We're not worried about anything happening now, because let's face it, if something happens in Taiwan, if there's a military confrontation, all bets are off globally. Everybody is going to be affected. It doesn't make any difference where you are. You might have some pockets of some havens, but otherwise, all bets will be off.
Yeah, we have bigger problems if that happens. What when it comes to China, this is also happening, and no coincidence, as Xi is going into the People's Party Congress, very important meeting that the Chinese Communist Party has every 5 years to really lay out its priorities. What are you anticipating from that? We know he's going to try to extend power for himself and solidify his power. Sure to be personnel changes, but from an investment point of view, are you looking at or expecting any trends to come out? Because they tend to have very big impacts when they do.
Well, it's interesting. I think at this stage, the Chinese need and want foreign investment. They need dollars because, as you know, they're facing a very big real estate crisis,
Yes.
Which is probably worse than the mortgage crisis that the U.S. had. A lot of Chinese households have their money in real estate. Most of them have, the stock market is very small in comparison to the real estate investments that Chinese make. So this becomes a very big economic and political issue. These property developers have to be bailed out. The banks are up to their neck in mortgages that are not being paid. So the Chinese really want more investment in order to help out on this. So it's a very strange situation because if the U.S. says, hey, you cannot, the U.S. already has said you can't invest in Chinese companies related to the government, but they could extend that and say you can't invest in China at all. That could be a problem for China because they really do need this foreign investment at this stage particularly.
Well, it is a strange juxtaposition, isn't it? Because on the one hand, we have tensions
Yes.
rising and strained relationships that may extend beyond the U.S. To many of its neighbors who might also be a source of foreign direct investment for China, while at the same time having this need. You also, aside from the U.S. rules, you also have a situation where they just, by reining in their tech sector, wiped out the equity of a lot of, we saw the very popular companies, Alibaba shares plunge in the wake of doing that. So even from a private sector position, China seems, I think, less attractive, more opaque. There are more concerns about, the hand of the government and what can happen. Certainly if you're an equity investor, that would seem a big hurdle that the Chinese government would have to get over if they want to attract foreign investment.
Exactly. This is a very, very interesting point. It's interesting in recent months when we went to see clients about our fund, the first thing they said, we don't want to talk about China. Don't mention China because they've lost so much money in China. So there's quite a lot of investors who've got their fingers burned because of what you just mentioned, Alibaba, Tencent, and all these others. But you must remember, the views in China are not necessarily, even within the Communist Party, are not necessarily unified. There's certain people who say, hey, let's look at the economy. Let's make sure that everything is going well with the economy, and let's not be so aggressive on the military side. But then there's a military side who say, no, we've got to take over Taiwan. And so, you got these conflicts, internal conflicts that have to be worked out. So it's going to be interesting to see how this turns out, particularly, if Xi becomes president for life.
Who has the upper hand right now in those camps? It would seem the military, pro-military or military hawks.
It looks like the military does have the upper hand, but, remains to be seen.
What is the state of the Chinese economy right now in your mind? What do you understand about what's happening on the ground there? Because we know the numbers are hard to gauge, but there are some concerns that growth is weaker than anyone realizes, is that the property sector is more of a bubble. They haven't gotten it under control, although that has been the messaging, that's still a massive problem that has to be delevered. What's your sense of what's happening there?
Well, there's no question that the economy has really slowed down a lot. And the government has announced they're going to have to try to boost the economy by pumping more credit into the system, which they can do. They can just print more renminbi. But there's a limit to that, too, because they can then suffer from high inflation. The plus for them, since they're in charge of the economy to such a great degree because they can control every company, even though they seemingly private. The government can always come in and say, look, you must do this or do that. So, and of course, with the banks, they can say, look, you have to bail out the property sector or whatever. But at the provincial level, then you have problems because some provinces are not able to make these changes. You must remember, a lot of the provincial governments, their budget was based on property sales. You know, when developers came to them, they said, okay, I want to buy this piece of property. The government then made money and they were able to meet their budget. Now that's out. So the question is, to what degree will the center, the Beijing, people in Beijing be able to bail out each of these provinces, which are, you know, these are big, they're like countries, 30, 50 million people. So that is the big question mark going forward. And that's the reason why I think there must be a debate within China saying, look, hey, we don't want to just keep on printing renminbi. We've got to get some foreign investment in. But that's a big challenge because, as I mentioned, a lot of investors have been burned, not only in the equity market, but in the bond market. Remember, a number of these provinces were selling US dollar bonds that are not being honored. So this is a big issue. It remains to be seen how that works out.
It's going to be an important theme to I think, to watch out for, any sort of hints or language around that in the party conference, or the elevation of somebody who would be seen to be more supportive of the economy. And they have the challenge, of course, anything they do to try to support the economy runs the risk of just refueling that property bubble.
Exactly. And inflation.
Right. Are you invested in China, or are you, because of all of these concerns, or is that an area that you are steering away from?
We invest in Hong Kong as a way to get entry to China. And it's not a big part of our portfolio, a very small part of our portfolio.
So we've talked about you're very bullish on India, and I'm assuming that's in the equity space. Is it equity and sector driven, or is it? I know you do bottoms up, but are there themes in India that, in particular, that you're interested in, and do they then mirror across emerging markets?
Well, software is one area that we're interested in India, but we're also interested in sectors that are related to construction and general infrastructure, like tubing. You know, we have a company that's in steel tubing, and then also in medical testing. That's another area that, those are the three themes that I would say are uppermost in our minds.
Yeah, very interesting. Again, speaking to some of the sort of, very large Indian investors that we've been doing a series recently, and the digitization, very interesting in healthcare as well, and their experience rolling out COVID-19, the vaccinations, really they made a lot of headway with digital identities, and the connection to healthcare. Super interesting developments happening there, I think.
Yeah, exactly. And that's the interesting thing about this whole issue of inflation. In my book, The Inflation Myth, I pointed out that the CPI, which is normally used as a measure of inflation, is very flawed and not a good measure. And it's really about money supply. And so if you consider that money supply in America has gone up by 30% plus, inflation should be up by that, but it's not. And the reason is because of technology. The technology that is being developed every day is making things better and cheaper. And it's quite remarkable. And that's going to hit India and these emerging countries.
Yeah, it's that sort of much larger picture, right? That is bringing cost, that disinflationary story hooked to technology. Rob Powell talks about it being the exponential age, but it's called many different things. But that broader channel, we've got these waves and we've got high inflation now, but as you point out, that larger trend is so powerful.
Exactly. It's incredible. I live in Dubai a lot of the time, and I can sit in my computer and order something on Amazon, get it at a price lower than what it's in the store, and have it delivered within 2 days, or maybe the same day. I mean, it's amazing.
Yeah, it's incredible. So you're bullish on India, you remain bullish on Taiwan. You like some of the sectors that we just talked about. What about Latin America and Africa? Are those thematic trends for you consistent across region, or are you looking at it on a kind of country to country basis before you jump in and do that bottoms up on the company?
We do look at the macro, and Brazil looks pretty good now. And we have investments in Brazil in the software area. Um, Mexico is interesting. We're looking more closely at Mexico because they're benefiting from what's happening in the US. In fact, I just came back from Mexico City. Um, so some of the other Latin American countries are interesting. And as I mentioned, we're in South Africa and Kenya. South Africa,
Mhm.
we're in a drug distribution business, a drug source chain. And we're in Turkey. I mean, a lot of people say Turkey, wow, the Turkish lira is bombed out. But yet we're in companies that take advantage of the weak lira, Turkish lira.
So that is a consistent theme with you. You are not just looking strong dollar, negative for emerging markets. You are flipping it and saying strong dollar, weak local currency. Who benefits from the weak local currency?
Exactly, exactly. So it's very much a bottom-up approach in that sense. However, uh, we must be very careful about the foreign reserves of each country because when we go in, we want to be able to get out. So, for example, we won't go into Nigeria because the central bank has no foreign exchange. So you go in, and when you want to get out, they say, sorry, no foreign exchange, you can't get out. So that's something we have to look at from a macro point of view.
This is why I think emerging markets are so tricky because you have to look at that macro picture. You have to look at the political risk. And then once you get the green light on that, this is when you're looking both at the kind of global macro investment trends, healthcare, infrastructure, technology, and then you're looking at the company itself. And that I assume is
Exactly.
like any mid-size company. What's their balance sheet
Yeah,
look like? What's the management look like? What do their growth prospects look like? Is that correct?
exactly. Of course, the great thing about international investing, emerging markets included, is that you have such a variety. You
Mm.
have lots of different opportunities that you wouldn't get in just one country. So that's the beauty. And you have diversification, which is a way of, being safe.
The moves we've seen in commodities, is that something that's impacting your investment thesis as well? Because we know that there are a lot of commodity exporting countries that were well poised for that, but we've seen the commodities come back, pull back in. Is that something that you look at, or is it just too boom bust for you to want to make a bet on?
We do look at it, and it figures in the foreign exchange situation.
Mhm.
So, for example, let's take Brazil. They're a producer of oil, so they have an advantage. They don't have to spend a lot of money foreign exchange on importing oil. So we look at that. What's the potential for earning foreign exchange? Because that will determine whether we're consider ourselves safe in investing in the country.
That's so interesting to think of it that way, and sort of the energy independence, dependence, and linked to foreign exchange rather than just sort of riding that, the bull price movement at any given time. What is the best way for should retail investors be playing in emerging markets? Maybe that's how I should phrase the question. Or is this because of the complexities of it something that only professionals should do? Should retail investors have exposure to emerging markets right now?
I think everyone should be exposed globally. Let's put it that way. And if you look at the global situation, emerging markets now represents 50% of everything. I mean, look, you got China, you got India, you got Brazil. These are huge countries.
Yeah.
So you can't ignore these countries. So I always tell people you got to diversify globally. A lot of people might say, "Oh, I feel more safe in Europe." Well, Europe is not necessarily safe. I mean, you've got a Ukraine war at the doorstep, and the currency has declined. Also, don't forget the euro was what at one point 120. Now it's 1 to 1. There's risk everywhere, but what we're saying is that emerging markets generally are growing faster than the developed countries. and there's a lot of variety out there. Brazil is very different from South Africa. South Africa is very different from Turkey. So you've got opportunities as a result of that.
I didn't follow up and ask you about Turkey, by the way, because there are a lot of people that are concerned about what's happening there. What makes you just think that there's enough reward based on the companies that you're looking at to outweigh some of the more political risk involved, especially around Ukraine and the leadership and what's happening on the ground there?
Exactly. It's really interesting. Turkey, in some ways, is benefiting from the Ukraine situation. They're exporting drones, for example, to help the Ukrainians. And you must remember that Turkey is part of NATO.
Mm-hmm.
So they have veto.
A critical part right now.
Right now. So they have quite a lot of pull in Europe as well, because most of their exports and trade are with Europe. So they're a very, very important country. And if you look at their capabilities, just look at Turkish Airlines. Turkish Airlines now, I think, has more countries to which they land than any other airline in the world. And they're an incredible airline. So that gives you an idea that the Turks are very, very capable. Now, of course, currency is a real problem, but it's not going to last. I think it'll get better as we go forward.
What's the time horizon that you operate on? This is probably a very important question, because throughout this discussion, I can hear you really talking about larger themes and kind of looking through maybe some of the shorter term issues, because you have a framework that understands A, B, and C about this theme. How would you describe your time horizon?
Well, the idea is you're putting money into a company. You're putting your faith in the management of the company and their capability, and you would like to stay with them. You'd like to be married to them forever. So, our idea is, say, if a company continues to perform, continues to have a high return on capital, continues to pay dividends, continues to have low debt, we'll keep them forever, as long as that, happens. Unfortunately, it doesn't stay that way all the time. Mm-hmm. So if things deteriorate, management changes for the worse, the company gets into debt, then you have to consider selling. But by and large, I would say our average holding period is about 5 years.
So it's
that's a normal cycle.
Yeah. So it's I think what gives you the ability. By the way, for someone who's been doing this for as long as you have been doing it, which is incredible to be using all that experience right now. As I listen to you talk, it's very, very interesting, because I'm leaving the conversation thinking about emerging markets in a different way than I did in the beginning. And we say a lot, we hear a lot of analysts right now say it's a real macro moment, right? You've got a lot of issues that are very large, like the dollar but in emerging markets, it sounds like in some ways we need to think about it as being more micro, and thinking and being cognizant of those big themes on top, but understanding that you can't paint this entire sector with one broad stroke and think that
exactly.
It's always on the edge of a crisis, that things have evolved, and you have to look at it much more, yes, broadly, but then look at it on a country level, understand these big secular themes that run through those countries, the demographic themes, and then look at the companies that are best positioned at this moment, whether you're talking about exchange rate or their own management, and then make your investment thesis. So it kind of connects them all, but you don't start macro. You kind of have to have a dual approach. Is that correct?
You have to have a dual. Exactly. And what we do is we do scans. We have certain parameters that we're looking for companies, and now the database has got thousands of companies, and we can scan, and we begin to pick up companies that look interesting and say, oh, this country is in Mexico, or this country is in South Africa. Let's look at the macro. And then you have to work it together. You have to look at both at the same time, really.
That's so fascinating. We are so thankful for all this investment knowledge that you just dropped on us. And I think it's a really important time. People need to take active control of their investments and understand, and maybe think outside the box, and make smarter decisions. And I think you helped us do that today. So thank you so much for that.
Thank you very much. It's nice being with you. All the best.
Hey there, revolutionaries. To join a community sharing insights like you just watched, head over to realvision.com. There you will get unbiased insights and exclusive access to the very best, brightest, and biggest names in finance. Be a part of our community of lifelong learners. See you there.